Okay, so we finally got interest rates at about 6.5, where I've been predicting over the last year, and that tariff news really threw us for a loop. But now that we're there, what's next for home prices? And the reason why I bring this up is right through here. Headlines on CNBC today is July new home sales come in at 652,000. Median home prices are starting to drop. So is this something to be scared about if you're a homeowner? If you're a home buyer, should you wait on the sidelines to see these dips drop even further? Well, that's what we're going to talk about in today's video, folks. So my name is Dan Frio. I do this report each day to help you guys understand what's going on with those and the whys behind it. And we come in here each day, and I've been telling you guys rates are probably going to be about 6.5% Q3 of this year, and we are here. So if you've been waiting to take advantage of this to refinance, well, today's your day. I'll give you all my information at the end of this video because we have an interesting slogan here. It's one application, one credit pool. We're going to compare your mortgage to over 30 different lenders. How do we do that? I'll give you that at the end of this video. Let's get to these things. So here's what we saw on the headlines today. July new home sales came in at 652,000. Median home prices are falling. Well, here's what's interesting. I'm going to play a clip from this here in a second, and they're going to go over what the numbers look like there. But then we're also going to go over here. Here's the news, and I'll let Diane Olick give that to you. But the interesting thing is I did a survey not too long ago, and these are the top 2 surveys I did within the last 30 days. The first one was right through here. Pick the topic of the day, or the topic of for my live event. Huge support for 70% vote for, will rates ever go back to 5%? Well, that was one piece of the things. And then here's the interesting thing. Would you buy a home today if rate hits 5% again, mortgage rates? 80% of the people voted, yeah, they would buy. So a lot of people were out there, they're saying you'd be an idiot to buy and so forth. Well, 80% of the people right now. So there is a demand for homes. Okay, so that being the context, let's go back over to Diane Olick to try to explain this to us. So let's get to Diane Olick. She's going to give us the numbers. But here's an intriguing piece I'm going to also give you. Where first-time home buyers are looking to buy, and there's an inventory glut happening right there. So it might be time to maybe use your negotiation skills to get a little bit better prices from home builders. But let's get over to Diane Olick and see what the numbers look like today on the home numbers and also the median home price. Diane, take it away.
Home sales in July came in at a seasonally adjusted annualized rate of 652,000 units. That is a beat. The street was expecting 632. It is still down 0.6% month to month and down 8.2% year over year. Why? Because June's number was revised up to 656 from 627. So you saw a stronger June than we thought. Now, this number is based on signed contracts during the month of July, so people out shopping, inking their deals, and that's when mortgage rates were still on the higher level, above 6.75% on the 30-year fix. They have since come down considerably, but that didn't happen until the first week of August, so that's not represented in these numbers. Now, the median price of a new home sold was $403,800. That is down 5.9% year over year. So you see the builders lowering prices. Of course, we know the builders, the big publics, have been buying down mortgage rates. We did see in the builder sentiment report for August that they started to see a little more buyer traffic. So that combined with lower rates might help in August. But we did also see the supply come down to a 9.2 month supply. That's down from a 9.8 month supply. So supply coming down is better. We need a balanced market. But again, so sales lower, but better than expected. So it's kind of a strange report. Back to
So did you see the numbers were revised by 40,000 last time to the better? So 40,000 more homes sold on the revised numbers. Then she also said these were numbers when rates were, right at 7%. Well, look at the rate today, 6.55. So I can actually tell you or validate the enthusiasm for people buying. Like I said, I can give it to you right here. Would you buy a house if rates hit 5%? And the majority of people by far said yes. Okay, so the demand side is there. I'm just showing you that on our end. So to go to the economic calendar, here's the home sales that she spoke about. Tomorrow, there's really nothing there that should really upset the markets. Durable goods orders, it could be if it kind of comes way off, but if you look at these numbers month over month, they're pretty sporadic anyways. Look, we were -1 to +3, negative or +16 to a -9. So they're all over the map. So I'm not really thinking that the markets are going to really get upset about the news tomorrow. Then the news that we're really focusing in on is on Thursday. We have initial jobless claims and also continued jobless claims. And then on Friday, we get the PCE. This is the inflation number that the Fed's looking at and monitoring. This is actually what they come out and they truly monitor. The last reading was 2.8. They're not even giving a prediction here, but month over month, it was at 0.3. They're expecting it to stay solid at 0.3. I'm gonna go in with that, but Thursday I'll let you know what I'm thinking about with that. This number should come in. Let's see how my forecast work on Friday. So that's that piece of it. Now, the next thing I want to do is I want to take it over back to CNBC, and I usually don't play two videos. It all rolls together. Okay, so what Diane Olick was saying, you have to understand this. This is new home sales, meaning the homes that were just bought are built, not existing home sales. Okay, so let's get over to this. And she said that there was a 9-month supply of new home sales. It's a steady market is 6 months, so that's way too much inventory. So go out there and try to work your magic if it comes to you're looking to build a house. Now let's get over to the builder stocks, because this is going to show us where the consumer is buying. Are they buying on the high end, the mid end, the low end? Well, let's get his feet on this and what they're expecting from. They're going to give us the builder stocks, but they also roll into the housing market agenda. So I think you'll find this interesting and also informative. Let's get to it.
So our next guest says valuations are currently as dislocated as they have been at any point over the past 10 years. And when that happens, they've returned almost 50% relative to the market over the next 12 months. That's a potential profit opportunity. So here to discuss that thesis is John Lovallo, U.S. home builders analyst at UBS. John, that's a heck of a tease, because if this really is kind of play out like history, there could be some real money to be made. What exactly is taking you through that part of your analysis, and what do you think is going to happen?
Sure. So to put things into context, since the beginning of earnings season, the builder stocks are up 20% versus the market 3%. So a nice outperformance. And really, we titled our preview note Bear Trap. And what we felt is that, look, investor sentiment had turned way too negative at a point when consumer confidence was starting to stabilize. We started to see interest rates stabilize. And most importantly, we were reaching the end of that negative earnings revision cycle, right? So now you think about that as a backdrop. And then if you think about from a cash flow standpoint, our valuation team at UBS has said exactly what you just indicated, that these stocks are as dislocated as they've been at any point over the past 10 years. And that has resulted in very, very strong returns as we go forward. And we've seen green shoots. Toll Brothers reported that traffic was up 15% in their communities in August. Web traffic was up 5 to 10%. Our consumer intent to buy index was at 37%, well above historical averages. Things are starting to move in the right direction.
Where are those green shoots most evident? Are they going to be in parts of the spectrum a la Toll Brothers on the kind of luxury high-end side of things? Or are they more towards maybe entry-level starter-type homes that gears more towards, say, a Lennar or others out there? Where exactly is the most activity going to be had?
Great question. We still think that the entry-level first time is the hottest spot to be in. That is where there is the least competitive inventory out there. There is some inventory, but it's old. I mean, inventory on average is about 40 to 45 years on average. And the lower priced homes, they're just not out there. And so the builders that can...
Okay, I'll stop at that, and I'm going to validate this, because here's what's happening a lot to these, and we've been talking about this on the channel. If you have an entry-level home, a lot of people bought those during COVID, and they got rates at 2-3%. So now, and I can even vouch, I got children and cousins and nieces and nephews in this situation. They're calling me saying, what do we do? And I'm like, well, if you could put a down payment on your next house, because they're all looking to kind of start moving up, you can cash flow that house if you don't need the equity and you don't mind renting out that home. And that's what a lot of them are electing to do, because they have a rate, at 2.5%, 3%, most of them. They can get $1,000 or $1,200 or $1,500 more in rent than their mortgage payment. So they can actually rent out their home, cash flow it, use that extra money to buy a bigger home. So that's what's truly happening with the low, the lower home prices. Middle range, that's kind of either the blue collar worker that's their first home, or that's the next move up. So those are okay. And then where you're talking, some of the, if you're an older person looking to buy a bigger house, you're either going to do new construction or you're going to get into those older houses that have the character and things like that. So that's what the entry level homes are tough. And if any builder can get into that market, but again, you have to price them to sell, and you have to have that inventory there. But on the inventory side, they said, Diane Olick said there's a 9-month supply. That's a lot of homes. So you have some negotiation power when it comes to that. That's what I'm going to show you guys. So, the demand is there. If rates do hit 5%, 80% of our people are saying that they're looking to buy, and that's what you're seeing. I don't think rates are going to hit 5, but we did some quotes on FHA the other day, and we were at 5.99 without people paying points. So if you're at a rate 7, higher on an FHA or government sponsored loan like VA, reach out to us. We'd love to help you out. The market today, well, the Dow Jones and everything, we'll get to that in a second, but right through here, bond market was flat as a pancake. It started out the day low. Here, let's get to it. Hopefully we filled that gap. Here's what we talk about a lot of times. You ever follow my channel when we talk about gaps? And this morning I was like, okay, we got a gap here, folks, and I'm hoping we fill it on the upward and not the downward. So here's the gap that we had today, and it looks like it did fill. So the gap came pretty close right through here. So did you see we closed Friday right through here? All right, we opened down, and then the market recovered all day long. Basically, we're just a hair lower than where we closed on Friday, and Friday was a really nice day where you got about 1/8% off in rates across the board after Federal Chairman Powell, said his thing. So I thought we'd get a little, pullback today, but no, the market's actually reprieved themselves. So by the end of the day, market's kind of recovered. So tomorrow, this should be basically flat, or it'll have a recovery or an adjustment tomorrow. So that's what you're seeing through there. So the bond market's really nothing today to really talk about. The Dow Jones and everything else, that's a completely different story. You have Nvidia helping out the Nasdaq, but you have the Dow Jones giving back what it was up 900 points or so on Friday. So I think a lot of profit taking here in the markets right now. There really was no economic news out there. Warren Buffett, who heads Berkshire Hathaway, he came out with trains, and invested in trains. Maybe that should be something we talk about on Stock Talk Tuesday. Can it be? Nah, I already got that scheduled. So that is it for today, folks. So on to me, who I am and what I do, and do you need some help? Okay, so if you're watching this video, you're probably looking to buy or refinance and just trying to track rates and see where things are going. We'd love to be able to help you. Okay, so my name is Dan Frio. I'm actually a federally licensed mortgage loan officer. That means I'm licensed in all 50 states as well as Puerto Rico because the bank I'm at holds a federal license. That's that part. But here's the interesting thing. We have a slogan. One application, one credit pool. We're going to compare your loan to over 30 different lenders. Now, how do we do that, and how do you get involved? What are you looking for when you're watching this channel? Where are rates going? How do I compare things? Well, let us do it for you. Okay, so basically what we're a federal bank, so I'm licensed in all throughout the whole country, but we're also, I'll say, a broker because we have 33 lenders that we work with. Okay, so what I'll do is I'll get you approved. And then what I'll do is when you get the house under contract, or if you're looking to refinance, we'll start checking rates and costs. And then I'm also going to compare it to the 33 lenders that we're also using. And if I can get you a better rate and fees there, I'll just place your loan there. Same thing, same loan officer, same processing, same everything. And that's what we can do for you. So a little confused? Give us a call. Give us a call at 844-775-5626 or ask me, Dan, right here. Ask Dan a question. You can ask me, Dan, what are you doing? Or give me your scenario. Email me your mortgage statement saying, hey, Dan, here's where I'm at. What should we do? Or if you're looking to buy, did you check out this video right through here? We got a grant. They'll give you up to $7,000 with no paybacks. There's no lien. Makes it really simple to refinance because there's nothing to owe back. So if you're looking to refinance right now, click this button right here. But if you've already got some quotes and you're like, Dan, can you compare this quote to the 33 other lenders? No. Just click the loan estimate review right through here. Upload your loan estimate. Let me know when you're closing, and I'll get back with you and say, okay, we can beat them on rate. We can beat them on fees. I'm hoping I can win you as a customer because why else would you go back to them if I'm beating them on both situations? So to find out if you qualify for any of these programs or can we help you out, just go to therateupdate.com and we have a ton of information up here to help you out. So otherwise, I will be back tomorrow to show you the news and how it's affecting these things over here and the whys behind it. So thanks for watching today, guys. God bless. Take care and have a great evening. I'll see you tomorrow. Bye-bye.